So, what in the world just happened? In early February 2026, the crypto market basically sailed directly into a perfect storm. We're talking a brutal combination of economic jitters, a stumbling tech sector, and some serious geopolitical tensions that kicked off a massive global sell-off. Okay, let's dive into this and really unpack what went down.
And the scale of the damage, it was just staggering. A jaw-dropping $2 trillion in value was just wiped from the global crypto market, and that's measuring from its all-time high back in October of 2025. This was a truly historic deleveraging event.
And analysts were not mincing words. This quote here from Nick Puckerin over at Coin Bureau, it just perfectly captures the mood on the ground. Full capitulation mode. This wasn't just a little dip, folks. This was a wave of pure, unadulterated panic selling that gripped investors all over the world.
All right, so here's how we're going to break down this whole storm. First, we'll take a look at the damage. Then, we're going to look at the three big things that caused it: new fears about the Fed, the AI stock stumble, and of course, global tensions. After that, we'll get into a really fascinating twist about who was actually buying during the chaos. And finally, we'll ask the big question: was this a crash or a huge opportunity? Okay, first up, let's assess the damage. The sell-off was everywhere, but as always, all eyes were on the leader, Bitcoin. And what happened to it was its largest absolute dollar drawdown in history. Let's just walk through this timeline. It feels like just yesterday, right? October 2025, Bitcoin was flying high, a record of over $126,000. Then it kind of settled down, bouncing around 75K. But on February 6th, boom! The floor just gave out, and the price flash crashed all the way down to a 16-month low of around $60,000. Just gone. And if you want to see what that fear actually looked like, check this out. The Crypto Fear and Greed Index, which is a key sentiment indicator, it just plummeted, all the way to a score of 5. That is not just fear. That is extreme fear. We're talking a level of panic we haven't seen in years. So, what on earth caused this? Well, the first big wave of this perfect storm came right out of Washington, D.C., with a huge shift in what everyone expects from the Federal Reserve. Let's just call it the Warsh effect. The big catalyst was President Trump nominating Kevin Warsh to be the next Fed chair. Now, this wasn't just some routine appointment. See, Warsh is widely seen by the market as a monetary hawk, and that one single word sent a shockwave through basically every speculative asset out there. So, you hear this word hawkish thrown around a lot. What does it actually mean? Well, a hawkish policy is all about one thing: fighting inflation. And that means higher interest rates and a tighter money supply, basically less cash sloshing around the system. And here's why that matters so much. For the past few years, markets have loved a more dovish Fed. That means looser money, low rates, which is fantastic for risk assets like crypto. A hawkish Fed is the exact opposite: tighter money, higher rates, and historically a really tough environment for speculative investments. The market fears the hawk, plain and simple. All right, so that's piece number one of the puzzle. Now let's move to the second major factor. Because at the same time these Fed fears were rising, the absolute darling of the stock market, the AI trade, it started to unravel. And it dragged crypto down right along with it. So what happened? Well, confidence in that whole AI boom was shattered by a couple of key events. First, Microsoft reported cloud revenue that was, just okay, not spectacular. Their stock dropped 10%. Then the chipmaker AMD came out with a weak sales forecast. And the result? The tech-heavy NASDAQ index tumbled to a 2-month low. Now, here's the kicker. What's really interesting here is the connection. All through 2025, Bitcoin been trading almost in perfect lockstep with these big AI tech stocks. It was like a supercharged version of the AI trade. So when those tech stocks took a nosedive, Bitcoin didn't act as a safe haven. Nope, it just amplified the drop, plunging right alongside them. And as if a hawkish Fed and a tech wreck weren't enough, a third factor just had to enter the mix, basically pouring gasoline on the fire: a sharp spike in geopolitical risk. These super high-stakes nuclear talks between the US and Iran happening over in Oman, they started to show signs of completely falling apart. And you know how markets hate uncertainty, right? Well, the threat of a potential military conflict in the Middle East, that spooked global markets and triggered a classic risk-off event, where investors just dump anything speculative and run for cover. So you've got a hawkish Fed, a tech wreck, and war fears. It sounds like a recipe for everyone to just sell everything, right? Well, this is where the story gets really, really interesting.
You've got to ask yourself, in the midst of all this chaos, this total capitulation, with extreme fear literally everywhere, was everyone really hitting the sell button?
Well, get ready for this. The on-chain data reveals something pretty stunning. Look at this chart from Coinbase, one of the biggest exchanges out there. On the day of the crash, a staggering 74% of accounts were buyers. Only 26% were sellers. What?
So, what does this tell us? It means there was this massive split in what people were doing. While a lot of smaller retail investors were, understandably, panic selling, the biggest investors, the ones we call whales, they were doing the exact opposite. They were quietly buying. See, they're often betting on a much longer time horizon. For them, this wasn't a crisis, it was a fire sale.
And all of this leads us right here, to today, and the huge debate that's now raging across the financial world. Was this crash the start of something much, much worse, or was it maybe the buying opportunity of a lifetime?
And if you want a perfect picture of just how confused everyone is, look at this. Just look at the insane spread in these year-end forecasts from major analysts. On one hand, you've got bulls like Fundstrat's Tom Lee calling for $200,000 to $250,000. But then on the other hand, you have bears at Zacks predicting a drop all the way to $40,000. I mean, that is a massive difference of opinion.
And this really just boils down to two competing stories. You've got the bears, who believe this perfect storm has kicked off a long, painful crypto winter, all driven by a hawkish Fed. And then you've got the bulls, who argue that the big picture hasn't changed at all, and that those whales buying everything up, well, that's the signal that this was a historic buying opportunity before the next big move up.
So I'll leave you with that. The ultimate question. Was this massive sell-off a devastating crash that marked the end of an era, or was it the moment that smart money has been patiently waiting for, the biggest buying opportunity we've seen in years? I guess only time is going to tell.